All right, all right. Now we are live. How was everybody doing? Um, I hope everybody had a great day, a great trading day. I sure did, and this is the first time that we are going live, right? So we might have some hiccups here and there, but it's completely fine. I don't the DXY analysis that I sent you on the VIP on the VIP channel. And I want to start with that because it's extremely important to me that you understand why in this 200% this week, that's awesome. So it's important to me for you to understand why in such a bearish fundamental market for the US dollar, I'm looking for buys. All right, so if we go to a 3-day chart here on the DXY is the US dollar currency index. You can see that we are still in a very bullish structure right here. And for the past couple of weeks, we have been retesting the bottom of this structure. This is a 12-year-old structure dating from well, the bottom of the structure was printed in March 2011, and the first high was printed in January 2009. So even though we are in a very bearish fundamental for the US dollar, because I don't know if you know this, 45%, between 40 and 45% of all the US dollars that are in circulation today were printed in the. All right, there's a lot of chatting here. Right, but let's focus on the markets, on currency trading. Maybe later we can talk about going drinking clubs and whatever you want to talk about that. But for the time being, I really think that we need to focus on how we make money, right? And uh, there's another thing that I want you to understand. I'm not a trader that trades a lot. I try to trade good, right? Hold on. I'm having issues with my voice, right? All right. How about now? All right. So the someone said that the Brent trade was sent late. Uh, I don't think so. I mean, I took the position. I put on the buy stop, and I immediately sent you guys the. No, well, but let's focus on the DXY, right, on the US dollar, because I mean, the if you trade currencies, you need to focus on the US dollar, right? The US dollar moves the markets. And right now, it's important to notice that we have broken with these lows, right? And if you notice from the highs back in March 2020, when this new round of quantitative easing started, right? That's why the US dollar has been depreciating, of course. Um, every time that there is a pullback or there has been a pullback, it has never broken with the previous base. This first pullback was to this previous base, and then this pullback was to this previous base, and now this pullback has broken with the previous base. Now this is the 3 day. This is a 3 day candle. This is a 3 day candle, and I just saw that someone is considering a long-term buy on the U.S. dollar Mexican peso, and you know what? I agree with that. I mean, I do like a long-term long on the U.S. dollar versus the Mexican peso, and we're going to look at that chart uh, right after we finish with the DXY. Actually, why don't we look at the U.S. dollar Mexican peso right now because this is a trade that we are on currently. Let's go to the daily chart on the US dollar Mexican peso. And the thing about this long trade that I do like for a swing trade is because we have broken with this very important level right now. Well, I mean, this is the daily chart, right? We had a week above it, right? But it wasn't a rejection week like this one. And right now, on the lower time frames, we took that long position because we are still trading inside of a very steep bullish structure, right? In fact, you can see it right here. We are still trading inside of this steep, very steep bullish structure, and we are retesting the previous key level, right? A resistance turn support. And the thing about key levels and the way that I look at the markets, right? I go back in historic price action. Yeah, this is the 1 hour chart, but still, this is historic price action, right? And what this level tells me, and what price action around this level tells me, is that this is where buyers jumped in to take price or to rally price up to the 21, above almost to the 2165, right? So pullback and a rejection of the same level tells me that buyers are jumping in again, right? And there is a strong possibility that we are going to retest the previous highs. The reason that I that the and the reason that I that my targets are lower than the previous high is because I don't know, or no one knows, if in fact buyers are going to be able to swipe all the sell orders that are placed around these levels. So to not be greedy and to take profits on a day trade or on a short-term trade, yeah, I'm going to target the previous base. But speaking on a longer term, on the US dollar Mexican peso, I do like a swing trade for at least a retest of this previous base, right? This is a massive, massive, massive 1700 pip trade. Now we don't know if price is going to get all the way up here, right? No one knows. But with a strong dollar, right, and a weak Mexican peso, it's very plausible that we are going to get there. Yeah. So yeah, I agree with you. I do like that swing trade on the U.S. dollar Mexican peso. But the thing about this is that I mean, if you're used to swing trading currencies, it's going to be easy. But if you're not used to swing trading currencies, it's going to be pretty hard because it's not going to be an instant move to the 23 level. There are going to be ups and downs, and there's a lot of levels that sellers are going to be protecting, right? Now, the other one that I do like is that for a swing trade is silver, right? Let's go to silver because we are in a well, we were in a long trade in silver, right? And the reason that I took this trade is what was because of this. I mean, this was pretty obvious that a bottom, or at least a short-term bottom, was in place right here, right? Why? Because well, we have the 25 level, the round number, right? We have the 161.8 of the last leg up. This is a short-term bearish target. And if we go back, uh, in historic price action, here we have this key level. And again, the same thing. I always look for the same thing. Levels that buyers, in this case, or sellers have jumped in, and the levels where price has moved considerably, right? So, and the reason is because looking at historic price action and looking at these levels, right, where in this case buyers jumped in and rallied price. This was a massive move. This was a 21% move, right, in about 5 days. So looking at historic price action, I'm sorry, and looking where buyers jumped in this case, it's pretty obvious that buyers are going to be placing their orders at the same levels. Players in the market that were bullish or that are still bullish silver, right, are going to place their orders here. And that's why we had this very choppy price action at the bottom, right? And this rejection of this level, right? And the break of these highs gave me the entry to go long. And the reason that we took profits early, and we didn't wait for price to reach our targets, was because of this, right? This is the 50-minute chart, and what I saw was price stopping, and well, we had two. I mean, I had two very different choices to make, right? One was to take profits early, and the other one was to move my stops to break even, right? And wait for the next pop to our targets. But because we were so close to our targets that I didn't want to, moving my stops to break even and putting our trade out there for the possibility to get stopped out of break even was not optimal. So I was happy with taking 75% of the move, right? But the thing about silver is that what I'm looking for in the next few days is this. Now, this is a massive level. This is a massive level in silver, right? And it's going to be very hard for buyers to break through that 2590 to 26 level. But if buyers break through this level, what we're going to do is we're going to wait for the retest, the rejection of this level, and we are going to buy for a mid-term trade too. Yeah, I don't want to say a long-term trade or a swing trade, but it would be very nice. First of all, the risk to reward ratio is going to be amazing. First targets would have to be these highs. Now, on my charts, when you see these lines, this is the previous weekly high. This is the previous weekly low, right? I really use because I focus on the previous 3 week ranges, right? For example, silver. Last week, the range was let's call it 2,250 pips, right? The week before, it was about 2,200 pips, and the week before, it was about 1,500 pips. So I know on average how much can silver run on any given week. And right now, this week's range, it's only 965 pips. So if buyers are able to break through this level, we still have at least 1,000 pips to the retest of these previous highs. So that's actually I am going to flag it red just to keep an eye on it, right? So yeah, I mean that's my idea. That's my trade idea on silver, and that's what I mean. To me, trading, actually trading, actually clicking the mouse, it's let's call it automatic, because what I do is I go through my charts, I do my analysis, I have my notes, etc. And we just got stopped out on break even on Brent. That's great. Uh, so what I do is I go through my charts, I go through all my watch lists, all my majors, my minors, exotics, commodities, equities. I have Bitcoin here just for the fun of it, but I don't trade cryptocurrencies. But what I do is I go through every single chart um, a couple of times per week, and I go through these what I just told you about silver, right? Possible scenarios, right? Possible scenarios. Now, what happens? What happens if buyers are not able to break with the 2026 level? Then I'm going to look for shorts. But the thing about looking for shorts is that we need to focus on the DXY, right? Because if the US dollar is dipping, right? Right? If the US dollar continues to dip, right, and it breaks with this with the short-term bullish structure, metals are going to rally, right? So if I see a rejection in silver on the 26 level, I'm going to go back to the DXY to see how the DXY or how the US dollar is trading. But yeah, those are the two scenarios in silver. And the thing about this is that right now, for me, gold is in a no trade zone, right? For me, gold right now is in a no trade zone. Why? Because even though this falling wedge broke, there is too many levels here that that are going to push price down, right? And the risk to reward on our long trade in silver was much better than the one that we had in gold, because if you remember, the one that we had, the buy stop that we had in gold was above these highs, and our stop loss was below these lows. So the risk to reward on this gold trade was a little better than a 1-to-1. That's why I decided to delete that pending order and go long on silver. Now let me have a look at the chat. If you have any questions, just post it on the chat. I'm more than happy to respond. The US dollar, South African rand. I don't trade. I do have the South African rand here on my watch list, but I don't trade it. Um, I have the US the South African rand and the Norwegian krona, because when the US dollar has explosive moves, these exotic currency pairs move really hard. But if I'm going to trade an explosive move on the US dollar, my go-to currency pair is the US dollar Mexican peso, right? More so if it's a bullish move on the US dollar, right? Because how weak the Mexican peso is. Right, so that's metals for me this week. Gold, I'm not even looking at gold. Well, no, I'm not even looking at gold. I mean, what I'm really looking at is silver for that possible break and retest trade and a rally or a short. In any case, in any case, the risk to reward on either the short or the long trade in silver is going to be awesome. All right, so what currency pairs to buy or sell? I don't know. I mean, I do, but I can tell you that. What about GBP USD and Aussie US dollar? What can we expect, bullish or bearish momentum? Let's have a look at the Aussie, right? Now the Aussie US dollar, um, right? Let's start by looking at the long-term chart, the daily chart, just very quickly. And you know what? This is actually good that we're looking at the Aussie, because if you look at the first line, the first horizontal line, around the, what level is this? The 78. Let's call it 78.40, right? To me, this I actually was trying to short the Aussie when it hit this level, right? But when I saw a super choppy price action, I just closed my short. The reason that I was looking to short the Aussie at these levels was because we were retesting not only these highs, but also this base, right? And the last time that the Aussie was trading at these levels, it dipped. Well, let's not take in consideration well, let's do it. It dipped 30%, right? So I'm not saying that I was looking for a 30% move to the downside. No, but because of how strong sellers jumped into the market at this level, I was looking for at least a retest of these highs, which would have given me about 500 pips, right? But right now the Aussie is, and yeah, that was a counter trend trade, which I don't do very often. But also just look at that divergence. I mean, everything pointed out at a high probability of a pullback, right? And but then again, we are the Aussie is super strong at the moment. Okay, it broke through that level, and the next level that I'm looking for shorts is the 81, the 81 level, or these highs, right? But just by looking at how strong this trend is, yeah, I will probably look for shorts at this level, but I'm not going to go full risk on it. Yeah. Having said that, let's go to the hourly chart, right? Let's go to the hourly chart. Cool. Let's go to actually start. Let's start by looking at the 4-hour chart. Yeah. So right now, to me, even though what I would want to do here is to buy the Aussie against the US dollar, to me, this looks very bearish. Why? First of all, we broke with this massive base, right? If you notice, we have these two lines right here. So the past 2 weeks price was capped to the downside by this level. So this is a strong level of support, right? And last week price broke with this level. Let me just delete this Fibonacci retracement. Right. So last week price broke with that level. This to me is a super bearish flag. I'm sorry, super bearish flag. Not only that, right now we are trading below the weekly pivot. I don't know if you guys use pivot points in your trading, but I don't. The only pivot point that I use is the weekly pivot, right? And I don't use it to trade per se, but the way that I use it is in confluence with key levels. And in this case, the weekly pivot is telling me that this is where sellers are positioned at the moment, right? And if we are trading below this level and below the weekly pivot, to me this is very bearish in the short term. More so if the US dollar is rallying, right? So what to expect on the short term on the Aussie US dollar? This is a 4-hour chart. Let's go to the hourly chart. If you are into scalping, and not scalping, this looks like a wow. This actually looks like a very very nice short position here from the weekly pivot with an amazing risk to reward to test the weekly lows right here. This actually makes sense to me. Does it make sense to you? This short position on the Aussie US dollar? Well, not short position, but this short trade idea? All right. Okay. Cool. I was just reading through the chat. There's no more questions. But yeah, that's my thoughts on the Aussie US dollar, and actually, and this actually looks like a very good short um, trade idea on the Aussie, and I am considering taking it, but I need to look at the DXY. What the DXY is doing at the moment. Yeah, I don't know. This is why this is why I'm not going to take that short on the Aussie, right? Because the DXY is trading below this base, right? And because the DXY is trading below this base, right? This is how I look at the markets, right? And this is how I trade. To me, yeah, the Aussie US dollar short trade idea was, let's call it an A plus setup, right? It had everything. It has everything for a high probability trade. But then I go to the DXY to see how the US dollar is trading. And because that short position is a short term short on the Aussie US dollar, I need the US dollar to be bullish. And at the moment, because we are trading below this level, below this base, and below the last week's high, the US dollar is bearish. So I could take it. I could take it, but with half the normal risk. But to me, just because the U.S. dollar is trading below this base, right, and below last week's highs, it makes that short trade idea on the Aussie U.S. dollar a little bit too speculative for my taste, right? Because we don't know if buyers are going to be able to break with this level, right? And I'm not. I don't like trading on a wishful thinking basis, right? I need to be sure of what's happening, and no one knows what is actually going to happen, but I'm always looking for the highest probability trades, right? And this stops me from taking that short on the Aussie US dollar. And I'm not saying that it's a bad trade idea. No, actually, I mean it's looking super good. But yeah, I mean, if it makes sense to you, right? Now let's have a look at the pound. Yeah, the pound. Yeah, let's start with the daily chart on the pound, right? Now this I'm sorry. So the breakout of above the 134, right, was a really hard trade to hold. I actually took that breakout, but I ended up my trade ended up getting stopped out at break even just because how choppy this was, right? But yeah, let's talk about the pound versus the US dollar. I mean, if you notice, I haven't worked on this chart for a while, but why don't we do that together, right? So hold on. Let's go a little thicker here, and there you go. So I think right now we are retesting this base. So that makes for a not even retesting that base, not even retesting that base. So this is another thing, right? This is another quite speculative long position, right? That I'm not too keen into taking when price fails to test a level. And I know that level, and of course you know, also know that levels are not straight lines; they are zones. But what I'm always looking for is a rejection, right? A rejection candle on the daily or on the 4-hour chart. I'm always looking for a rejection candle on the higher time frames. And the reason that I'm always looking at for a rejection candle on the higher time frames is because that gives my trade idea a higher probability of success. Now, in this case, because I don't have that rejection candle, and the rejection, I mean, and the real rejection that I'm looking for is the rejection of the previous highs, right? I'm all about levels, previous highs, previous lows. Those are the zones where the high probability trades and the highest risk to reward scenarios yield. And because I haven't had that rejection on to the previous highs, which is a massive zone. I mean, just by looking at price action right here, just by looking at price action right here, just have a look how buyers were trying to break through, and eventually they were able to swipe all the sell orders, right? But this was a thick area, thick area, and when I see thick areas like this, I'm always looking for that rejection candle, right? And because we hadn't had that rejection candle, and I'm telling you this because I've done the back testing, you know, and every time that I take a trade, or well, in back testing mode, right? Every time that I take a trade without that rejection candle, it ends up, well, not every time, right? But most of the times, it ends up being too early and I get stopped out, right? And then the rejection candle comes and then the move comes. So, yeah, this is the thing, guys, right? I might be wrong about the pound, right? I might be wrong about the pound right now. The pound might rally from these levels, but I don't care. I mean, if the pound rallies from these levels, good. I mean, more power to everybody that got long. I'm not. I'm not gonna be long because it doesn't fall within my rules, right? And this game is just about, it's about data, about analyzing data and understanding probabilities. There's nothing more to it, right? And I mean, but I've been journaling my trade for years. I've been backtesting for years, and I know specifically what to look for to get the highest probability setup or the highest probability trades, because I hate giving money back, right? It's so hard to make money trading. It's so hard to make money trading the financial markets that giving back is, it infuriates me, and it's so easy to lose money, right? So yeah, I was rambling, but let's talk about the pound, right? Let's have a look at the hourly on the pound. Right. Let's see if we have reached some targets. We are trading, right? I know that you're not too keen on trading with a pivot, but the weekly pivot to me is an amazing tool, right? Right now we're trading, very choppy within the weekly pivot. But the thing about this is that we broke with the previous highs, right? Which means that the short-term bearish structure has broken, right? Now, this is the first step, okay? The short-term bearish structure has broken. So, yeah, there might be a bullish move brewing, right? But to me, this is just not enough. Let's have a look at my oscillator. Massive bullish divergence, right? That's another plus to that possible scenario. Let's have a look at the current structure in this market. Cool. Right, so yeah, we're still trading inside of a bearish structure. But the thing about this is that if you zoom in, this looks like a bullish flag, right? And if it looks like a bullish flag and smells like a bullish flag, must be a bullish flag. No, it doesn't, but but it looks like a bullish flag, right? Now, where would you take a long here, right? Where would you take a long here? I would definitely not take a long at these lows. No, not at all. My long idea would be above these highs, right? Because of risk to reward, I would not place a buy stop above these highs. Why? Because with the current market structure, if I place a buy stop here, my stop loss would have to be right here, and my first targets would have to be here. So the risk to reward is negative. Well, not negative, but below 1. So I do like the upside on the pound versus the US dollar, right? I do. And this trade, and this is the thing about currency trading. We were talking about, you remember, we were talking about the Aussie US dollar short, that it looked good because the US dollar is currently rallying, right? Now, if the US dollar is currently rallying, it doesn't make sense for me to look for pound versus the US dollar longs, right? Because if the US dollar is rallying super hard, it's going to take the price of the British pound against the US dollar down. But this is different because this would be a pound-based trade, not a US dollar-based trade. So that's the difference. The pound is very strong at the moment. I'm not going to go into details on fundamentals, etc. But this long idea on the pound versus the U.S. dollar is not a U.S. dollar based trade. Is a GBP based trade. So my idea would be to wait for the rally, wait for the break of this level, these highs, and this bearish structure. I'm sorry, and wait for the retest and buy here, right? Why? Because if price starts to rally, right, it's going when it reaches this level, it's going to stop, right, because of the selling pressure, right, and it's going to do something like this. And right here, these lows are going to give me a great risk to reward to my first targets, which are all the way up here. Why? Because my stop losses would have to be not below the first lows, but below the last lows of the structure, right? Why? Because I mean, if I get ticked in on my longs and price goes down, I want to be out if price breaks with the immediate bullish structure, right? And that's it. So I'm waiting for two reasons. One, to get a better risk to reward on my possible trade, on my possible long position, and two, because we are still making or printing lower highs and lower lows. I do not trade reversals. That's something that you need to understand about me. I don't trade reversals. I don't try to pick tops or bottoms. That is not my game. I mean, if you are into picking tops or bottoms, more power to you. But that is that is the best way to burn money. And I'm telling you this because I've done it. When I was starting up. I mean, trading. I mean, trading. I mean, people think that trading is this exciting endeavor, that they're all screaming, buy now, sell now. No, it's super chill. It's almost boring. I mean, trading is 90% analysis and patience, right? And the thing about this is because it's all about probabilities too, mates. It's all about probabilities. Why? Because we are still in a bearish structure right now, right? If I were to buy the pound right here, the probability of price rallying is lower than if I were to buy at the break of these highs. Now, you understand that, right? The probability of this trade is much, much higher than the probability of success of this trade, right? Why? Because you're counter trend trading. I mean, that's just me. I mean, that's just how I look at the markets, how I trade, and the reason that I do this, and the reason that I do, or that I trade the way that I do, is because I mean, I started up like everybody, I started up like everybody years ago, and it's a hard endeavor. But once you lock it down to a checklist, and once you lock it down, and once you understand that this is nothing more than data analysis, data mining, and probability calculations, you're going to be successful. Another thing is you need to learn how to take profit, because that's something that I struggle with. So let's have a look at the chat. All right, the spoos, yeah. All right, the pound yen, the pound yen. Yeah, yeah. Okay, the pound yen. See, the pound yen. Oh man, have I missed these rallies on the pound yen for the past couple of months? I have missed every dip. I have missed every single dip. But yeah, the pound versus the yen. Um, the thing about this, the other thing about this is I don't like trading overextended moves. Yeah, I'm very bullish on the pound, right? But if you look at this, I mean, this pullback right now to again the previous weekly highs, guys. This, I mean, this. I'm not making this up. This pullback to the previous weekly highs was just too short for me, right? Even though I'm very bullish on pound, this was a no trade for me. Why? Because this move was so overextended, and not only this leg. I mean, just have a look. This move has been so overextended that I mean, if you look at the previous pullbacks, right? If you look at the previous pullbacks, this one right here, this was a 140 pip pullback. This was the entire week range, 300 pip pullback. This is a small pullback, but still 124 pip pullback, etc. Right? So trading a 45 pip pullback when the average pullback on this bullish structure is about what, 175 pips, let's call it. To me, that is also burning money, right? Even though we were retesting yesterday's highs or the previous weekly highs and the week before, this entire zone was very strong, but this dip was too short for me. So what to expect about here, right? I don't know. I mean, mates, I'm just waiting for a deep pullback to buy into it. Right. Let's go to a 2-day chart just to have a look at some levels, right? That we can work with. Let's go to a 3-day chart. All right. So we have these highs, right? Which are the highs that we just broke with. The next target should be the 153 level, right? And I mean, between the level that we just broke with and the 153, there's absolutely nothing in between. So what I would expect is, or what I would look for is the price to hit this level and just to pull back to a previous weekly high or so, you know. But to me, right now, the pound versus the yen, sadly, there's no trade. Let's have a look. All right, S&P, US dollar Mexican peso now negative. That's right. Yeah, but I mean, we're still in. Right now at break even. I'm not. I'm definitely not closing that trade or not moving my stops to break even on that trade. That trade is awesome. So let's have a look at the S&P 500. All right. We don't need to look at the long term chart, right, on the S&P 500. Let's have a look at the. All right. Uh-huh. Oh, this is let's go. Let's have a look at the 4-hour chart. All right. I'm going to delete everything, all drawings. And but all right. So this is the thing. The S&P 500 um, pulled a bull trap on my buy level. I was not in. I was not in, but put a bull trap on my buy level. And when it comes to equities, I mean, when it comes to equities, I'm even more patient, and I only trade if price hits my levels. And on the S&P 500, my level was the 3700, right? Now, this is the 4-hour chart. On the short term, just have a look at this. I mean, this is the 1-hour chart. Look how ugly this chart is. It's just ugly. It's just ugly. Well, if you want to trade the upside on the S&P 500, I mean, I don't know. If price breaks with this week's highs, we have the previous weekly highs super close, and the week before highs super close. I mean, to me, you already missed the move on the S&P 500. Now, having said that, no, actually no. I mean, I wouldn't buy the S&P 500. You know, the one that I like better is the Russell 2000. I don't know if you trade it. Let me have a look at the chat. Yeah, but Brent, hey Danny, you missed the Brent trade, but I mean, we got stopped out at break even. All right. Well, let's have a look at the DXY. Yeah, that's the thing. Remember that I told you about this, that below this level, the US dollar was looking very, very bearish on the short term, right? That's why the US dollar Mexican peso is reacting the way that it is. But like I said before, I mean, that trade, and because I'm not closing it, because to me that's an awesome deep buy. And yeah, I mean, I sent you guys a target, but I'm holding a percentage of my trade for for a break above, for the scenario that we were talking about actually earlier. And I mean, if this trade goes our way, um, yeah, if this trade goes our way, why don't you guys close 75% of the trade at TP, at the target that I sent you, and I will update you on how I manage the trade for a long-term trade. So we have something going on for a couple of weeks if it plays out, right? Right. Metals are rallying. Wow. Silver is super super strong. Yeah, let's have a look at metals quickly. Yeah, metals are rallying. Yeah, silver just hit our TP. But again, I mean, I know that some of you might think, damn it, why did we close that trade early? We missed on what, 10 pips or so? I don't know. Whatever. But the thing about is that, I mean, just look at this price action around the pivot. If we have profit secured, why would you risk why would you risk those profits on a high probability? Well, not high probability, but on a strong enough probability that price might reverse and stop us out at break even. You know, I mean, to me, it really doesn't make sense. right. So what else? We have been live for about 55 minutes, guys. Um, I'm pretty. I mean, I had fun today. We can. I mean, I'm planning to do this once a week with only I mean, only for you, the VIPs. And the thing about this is the first session, right? I know at first it was a little awkward or whatever, but yeah, but what we can do here is just, uh, start to I don't know, maybe taking trades, taking some long term positions that we can week after week go through them. I don't know. Also, if you want me to look at any given market, I mean, if I understand said market, I will give you my insight, right? Because I'm not gonna lie to you guys. Uh, I don't trade markets that I don't understand. That's why I don't trade agriculturals. Yeah, coffee, corn, etc. I don't trade that because I don't understand the fundamentals behind those market moves, right? That's why my focus is currencies, because I bleed global macro. But yeah, and if any one of you trades something that I don't, please, please just say it, and maybe you can teach me how to trade those markets. All right. So I hope this was a good session like it was for me. I really had fun. It was nice to meet you all. Great discussion. Hold on, we have a question from Hungry Foodie. XPT USD, that's oil, right? Uh huh. No, maybe tomorrow. I'm going to look for another opportunity to buy Brent. Uh, I don't know. Can I get some support on my phone? I don't know. Really. But yeah, Brent. After the small rally that got us in on that long position, now price looking super bearish. But if we have another rejection to on the same level like we did today, I will be looking for buys again tomorrow.